What is going on? Yo, what is good? We going live. Having some issues here with my webcam, but you know what? It's all good. We're just gonna keep it moving. Welcome to HPT. Today we're gonna be breaking down. Basically, we're gonna be breaking down trading. Right? Trading is very. It's such a crazy game. Right? Back, forth, love, hate. The market has been extremely just challenging, right? It's been challenging. I'm not going to lie to you. These last 2 days have not been easy. And over here at HPT, we're all about self-reflection, right? Like I always got to make sure that I'm viewing the scenario properly, right? And that's why trading, in my opinion, is the most awesome game in the world. Because in this game, you learn to analyze yourself, okay? And you learn to see, hey, am I making a mistake? Am I following my process? How am I doing, right? Am I over trading? Am I overthinking? Am I sticking to my rules and my concepts and my principles, right? So this is some stuff we're going to talk about today. It's been a wild these last 2 days have been straight just garbage. We pulled a few good trades out, so I want to talk about those, and then I want to dive into a little bit of a data review because anytime I'm ever going through, I had 2 losing trades today. I had a losing trade yesterday. I had a few winners in there as well. But anytime I start to see some losing trades, I gotta make sure I'm following my process, right? I gotta make sure I'm sticking to my script in my overall strategy. So we're gonna dive and do a little bit of a data review as well, and we're just gonna kick it off, right? So let's dive right into it. Let me pull up some charts, right? So number one thing is to make sure you're following your strategy. Right? Are you seeing the market clearly? Are you viewing price action from an objective state, right? Well, how do we approach the market? So every single day, let's talk about yesterday, right? Which was Tuesday. We got Monday, we got Tuesday, and Wednesday right there. So we're going to dive into Tuesday, which was yesterday. So every single day, I map out my charts the exact same way, right? I'm going to show you guys how I do it. So the first thing I do is map out previous day high. Pit numbers are key, okay? Pit numbers show us what the banks are doing. What are pit numbers? That's previous day high. That's previous day open print, right? That's the open print. Then we have previous day low, which is the lowest price from the previous day. You can see we got some play there yesterday. And then we have end of day, EOD, okay? So these are our pit numbers. And isn't it crazy? It just blows my mind, right? How we actually hit all these levels yesterday. We literally hit every single one. Now, it may not have been done the way we want it to be done. It might not happen when we want it to happen, right? But the market did follow the principles that we do, right? John, yeah, today was trash. Today was garbage price action. In my opinion, so yesterday was as well. And this is the thing, right? We can't control any of that. We can't control price action. So we have to get really good at identifying good conditions and bad conditions, right? So I see your question right there. How do you get EOD? So end of day is the closing bell price, okay? So you see that candle right there at 1600, or actually the close of the 355 candle Eastern, right? That's end of day. You can also find end of day up here in the corner, right? So you guys see that little corner spot right there, 56115, that's end of day. Oh, I'm sorry, that's end of day for today's price action, right? So if I go to today's price action, you'll see right here at 561, what's the close of this? 56123, right? EOD. So end of day is the close of the previous day. So just a little background behind pit numbers, right? Pit numbers derive from the pits of Wall Street. right? Before there was computers, they only had newspapers. And basically in the newspapers, they would plot out the high, the low, the open, the close of the previous day, right? Now, that's cool, but that's not why we watch them. We watch them because pit numbers are the levels banks play with, right? If I show you end of day right here, look at the volume, right? See, we, as day traders, we rely on banks to actually move the price, right? We can't move price. The banks do. So we need to learn to spot what they're doing. So we watch the heavy volume populated area, right? So that's end of day. Cool. Now, going into the day, we're getting a very strong sell-off. Very strong sell-off. So if I whip up my Discord, I'm going to show you guys what my pre-market plan was, why I was approaching the market the way I was, etc. Right? So in the pre-market plan, I always keep it very objective. This means I'm looking for a bullish and bearish scenario, right? And basically, the picture that I paint is this is either going to go up or it's going to go down, right? Buyers are either going to control these critical levels or sellers are, right? So it's not up to me to make price move. It's up to me to identify who's moving the price and then trade with them. As my boy Todd says, who's got the ball? The red team or the green team, right? That's our goal every day. So basically, we go into yesterday just like we go into every day of the market. We get very strong selling or buying, but I need my edge to present itself. Once again, this is why our edge is very effective, because until it presents itself, the market just isn't the environment I want to be in. And this is what I want to talk about today. So we never know if it's going to be good price action or bad price action, right? There's no way to tell. So what we have to do is get very clear on what our edge looks like and what it doesn't look like, okay? Now, you guys know me. I'm always preaching repeatability. I got to have the same approach every single day. It can't be special, right? If it's special, I'm going to get emotional, right? If it's special, that probably means I'm gathering so much evidence that, the risk is low. In reality, there's not enough evidence in the world that's going to give you a perfect trade. There's no such thing as a perfect trade, right? All the confirmation in the world isn't going to land you in a perfect trade. The only thing that's going to work for you is you getting in a position in the market agreeing, okay? So I have a very repeatable approach. I want to show you guys something, right? So I map out open print as well. It's my job every single day to figure out who's controlling the open, right? If I whip that pre-market plan back out, remember, price is either going to go up to the pit numbers or down to the bearish targets. The bearish targets are pit numbers from previous days. So I'm always targeting a daily time frame level, okay? It's a very simple way to approach the market, and it works very well for me. So once again, I have my understanding. My objective is to figure out who controls this zone, and then I'm going to trade with them. Now, for me to actually pull the trigger, I need to identify my approach. Okay, cool. So I identify the open. That's number one. We're getting some strong selling here. It looks very bearish. Am I wrong? But for me to get in this trade, I need a red bar to smoke this green bar, okay? I need this candle right here to blow the bottom off. And notice, we didn't get that, right? We didn't get the red bar to smoke the green. But at one point, I want to make this very clear. At one point, this candle was completely red. Now, let me just do this so we can get a really good visual. So at one point, guys, this was red. Now it didn't break the low though. Okay. If this can, you guys see the wick, right? You see the wick on this candle I'm talking about. Now, for me to get in this trade, I'd have needed something like that, right? Red candle, smokes the bottom. I'm in short, stop above open print, which is this purple line, targeting 556, 52, and then whatever else my downside target was. So we need to get very good at being diligent, okay? I don't like the word patience because that implies that you're doing nothing. I like the word diligent. The word diligent means you are ready to act, but you are aware of the criteria that needs to be present, right? So we're being super diligent. We do not get our edge. Now, something really cool happens here. Buyers show up and price blows the top off open print and doesn't look back. Now, I want to explain something, and I think I could do better with this, and this is why I'm talking about it. I'm far from a perfect trader. I make mistakes all the time, right? What I want to do every day is make sure that I'm reading market information properly and acting the right way. Now, when price comes down below open print and we don't get our criteria, what's that telling us? Is that telling us that that buyers are strong? No. I'm sorry. Is that telling us sellers have the ball when they don't get the GBI? No, it's telling us buyers are strong and they push price above open print and price closes above it. This is very bullish. Very bullish, right? Because buyers are literally owning open print. This would have been a great long play, right? Price started to rally. I get in the market right here, right? This is my criteria. Now, this trade felt very uncomfortable. Why? Well, because we're pretty far away from the open and the move happened very fast. But this is my criteria. And according to the data, this is what works, right? So once again, we over here at High Performance Trader, our goal is to not make emotional decisions. It's to make logical decisions based off the data we accumulate, right? So once again, we're getting a red bar ignored, long play, boom, right? That's a great example. Here's another example, right? This looks very good. So we have to, once again, get very clear on what actually to look for. And this is it. This was a solid trade. Red bar, red candle here, gets smoked. Just like how this candle, this green bar, didn't get smoked, right? It didn't break. This was red, shot below, didn't break the low. Therefore, it was not ignored. If it's not ignored, that means buyers are stronger than we thought. We let the candle tell us, right? We don't see, our brain likes to make things up. It likes to try to predict. It likes to try to, guess what's going to happen, right? No, we don't do that. We allow the candle to tell us when and where to get into the market. That is when we act diligently. Okay. So we get our criteria. All right, cool. Hold on one second. Let me go here, pull this. All right, what am I looking at when I actually pull the trigger? And why am I getting in? So the main reason I'm pulling the trigger on this is because buyers took the open, right? Remember the pre-market plan, okay? The pre-market plan was whoever controls the open, I'm looking to trade with, right? The open is large money's canvas, right? It's a big, white, massive canvas. And large money, the banks, I want you guys to think, right? They're like artists, right? They're painters. They have the brushes. They have tons of paint. And they have this big white canvas. That canvas is open print. That canvas is end of day PDL, PDH, okay? They're going to paint their picture there. And then we need to trade with them, okay? This keeps us from reacting, this keeps us from predicting things and keeps us in a more reactive state, right? Okay, cool. So Josh, you long the market all the way up here. Okay. Now just watch what happens, because this is where the magic happens, right? This is where things get very cool. Now, I'm going to show you guys something that's going to help you read market structure perfectly for the rest of your life. Once you see it, you cannot unsee this, okay? This is the power of a red bar or green bar that gets ignored. Now, first thing I want to show you is, hey, Josh, here's a red candle. Why isn't this one important? Because it doesn't get ignored, right? The next candle didn't break the high, okay? What does this tell us? This tells us that sellers are a little bit stronger than buyers, right? When we look at this candle, within this 5-minute time frame span of life, sellers were a little stronger than buyers. Hence why the candle closed red. What's this candle tell us? That sellers also, they're still pushing. Now, there is some buying, right? It looks like it's coming from this spot right here. Now, what's this candle tell us? This candle right here at 10:45 tells us that buyers are stronger than these sellers. How do we know this? We know this because this candle popped the top of this candle, okay? That is plain as day. This is how we identify strength. Now, every time I see that, I go like this. Boop. Okay. So I'm in the market long. My moving averages are healthy, right? I got a nice trend going. I still feel extremely uncomfortable. But remember, guys, you're supposed to, right? If you don't feel uncomfortable putting on a trade, it's because you're making the same trade everyone else is and you're about to get violated, right? Like when you are looking for all this confirmation, all this evidence, you want that perfect trade, you are literally, and in the banks, large money's going to give it to you. They're going to line it up so you get all the criteria you think you need, and then you're going to act and you're going to get smoked, right? This is why I stopped trading reversals, right? I need to trade with the overall market conditions, right? I need to understand who's in control, and I got to trade with them. And that's what we're doing over here. So we get the red candle. It gets ignored. We're in the market long. Now, watch what happens as price comes back into this red candle, okay? Boop. Boop. Boom. She rallies up to PDL. Classic example here of market dynamics and just how it works. Now, did we feel comfortable when this happened? Absolutely not. I think I was down about, I don't know, I don't remember off the top of my head, but I was most likely down, let's see, it's about 60 cents. I'm down like 20% on this candle. But until we break the low of this candle, this is bullish. Green team's got the ball. So we caught a nice pop right there up in the PDL. It looked like it was going to keep going, and it reversed. Now you guys ready for the craziest part? Look at this. That candle literally held the whole way until that rally. Right? Now, I stopped out of my trade. I was already out of my trade. So I watched this happen, and just notice what happens. This thing rallies all the way up, hits every pit number, grabs that liquidity, that liquidity, that liquidity, and then what happens? Boom. She starts to reverse. That was trade one. Hold up. Let me hit my coffee. Trade number 2. Using the RBI and GBI entry criteria. I want to show you guys this one. This one was a little bit different. So the trade that I took was this guy right here. I'll highlight it. Bam. All right, this was our second trade. So once again, right, watching the market do its thing. It's all over the place. Let me pull up the Discord here just to show you guys exactly where we got into the market. So if I come over here to SPY Alerts, where we at? Boom, 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 boom. Yesterday, right here. All right, so this is what the market looked like yesterday when we were calling out in the Discord what I put right here in shorts here at 1:21 p.m. Okay, cool. What am I looking at here? Well, number one is look at what these sellers did off these critical levels, right? Rip, rip, rip. Now, what can we use to be able to spot this tomorrow, right? Because we want to be able to identify our edge, right? It's got to be repeatable. Look at that moving average cross. It's so beautiful, right? That EMA cloud, which John, this EMA, it's the 5 in the 20, okay? So the 5 EMA and the 20 EMA makes up the EMA cloud that we use. That's what all the data that we've collected, right? Everything you see in them data reports, it's all with the 5 and the 20. All right, so that's where we hopped in the market short. Let me whip back out the chart so we can dive a little deeper. Now, I titled this, Know When to Trade and When Not to Trade, right? This is very important because the market conditions are going to be all over the place, right? We're not going to necessarily know. How do we know when the market conditions suck? Our edge isn't present, okay? When my edge is not present, in my mind, the conditions suck. I want nothing to do with them. This means if I'm not getting an RBI or a GBI, I'm not trading. Now, it can be a little frustrating at times. It is, and that's just the price. But it's really nice to have a very structured way to get in and out of the market. And based on all the traders that I coach and mentor, most every trader I coach struggles with sticking to one strategy. So you have to ask yourself, what would it be like if you actually did, right? If you actually stuck to one strategy, how would it feel, right? And it really alleviates all the bullshit. And I'm going to show you guys what I do when I feel like I'm missing things, right? Because as price rallies yesterday and the end of day, we get tons of selling here. Now, the old Josh would have went full retard and chased this, right? I probably would have entered at the worst spot too. Now, I'm trying to get a little bit smarter. So now I'll only get into this market if my edge presents itself, which means I need a moving average cross off a critical level and an RBI and a GBI. So we have to be able to understand the story, right? Now, the story is buyers controlled this imbalance from open print to PDL and then all the way up to EOD. Now, clearly there was a strong seller up here at end of day, which made price rally to the downside, right? Now we're at the point where I like to call it, we need to spot entry criteria. Now, for me to identify opportunity, I need my entry criteria, right? Because it's not just our job to understand where the market's headed. It's our job to manage capital. And we can only manage capital properly, in my opinion, if you're using the RBI, GBI entry criteria, right? You're only ever risking one bar. And that's what we did. Price sells off, and I'm looking for my green bar to get ignored. I don't get it. But I do notice that this green candle right here is lining up with that initial RBI from the morning. So in my mind, I'm going, hey, buyers had control here. They tried here, they did really well, and now we're back into this level. So I'm going, if buyers lose this level, the next logical target is open print all the way to the downside. So price sells off, we come back into it, and then we get this green candle. Now, initially, I'm going, dude, that actually looks pretty bullish, right? It's a red bar ignored. There's no moving average cross, but I'm almost ready to long the market here, and then this happens. Boom. So I hop in short instead, because I know a lot of traders went long there thinking they were going to get a rally back up to the upside. And instead, sellers defended the 20 beautifully here, right? So once that 20 gets respected with that green bar ignored, we enter the market short, and now we're targeting open print. Now, we ended up hitting open print on SPX, but this was a beautiful trade using the 20 to guide us, right? Now, this is the power of the EMA cloud. You guys know I'm always talking about the EMA cloud and just how effective it is. But overall, this was a good day, right? Yesterday was a solid day. I think our execution was on point. The market conditions were all over the place, but I could have done better on this morning setup. I'm not gonna lie. I held this morning setup way too long. I was getting greedy. And this is the thing. We go through different issues. Hold on. Like, I don't care what people say on social media, right? Nobody's a perfect trader, right? Like, you're gonna make mistakes. In my opinion, the goal is just to make sure you don't make any vital mistakes, right? Like, don't go full retard, right? Like, it's okay to, hold the bag every once in a while, right? Like on this trade, I held the bag. I was really bullish. I was looking for a move up to previous open print. I was looking for a move up to end of day. Now, I didn't go full retard, though. I exited about 70% of my position right here, and I allowed my runners to go, right? That's what we need to do. But price reversed, and I got out of the trade. Now, did I break any crazy rules here? No. Okay. I followed my process. And that same process did me very well to the downside, right? Now, today was just a mess, right? Today was just a complete mess of price action. And for anybody that traded it knew, let's just go through it real quick. So every day, once again, what do? I plot my pit numbers. PDL. Then we get previous day open print right here. Something like that. And then end of day goes right here. I love looking at how price reacts to these pit numbers. It's truly amazing. And then previous day high. Go figure. We rally into it. Just real quick, let's take a moment here just to respect how well these levels work. Look at this. EOD, boom. PDH, boom. So in the morning, right, we have a simple 3-step approach. We follow it day in and day out, right? We get our open print right here. Boom. How do I identify open print? It's the open of the 930 candle, okay? This isn't super complicated. It's the open of the candle. Why is it important? Because the volume, okay? See the volume? Remember, this is large money's canvas, okay? So we got the open. We get a beautiful red bar ignored right here. That's really not a bad long play. It's not, but there's no moving average cross, so I'm not taking it. And notice, no moving average cross, not much follow through.
right? If you'd have went long right here, you'd have been kind of scared right here. But I want to point something out. This red candle right here was never ignored. Well, I'm sorry, it was ignored, but the bottom never broke. Okay? So, guys, when you're entering trades with the RBI GBI, I always know where to stop out. If I entered right here, my stop goes right here. Now watch though, right? Like really watch how price comes down and doesn't break the low. What does this mean? This means that these buyers are stronger than these sellers, okay? These buyers, right? This candle's red, but these buyers that push this candle up, causing it to be ignored, we should watch them, okay? Large move to the upside. We get in long right here. Trade looks amazing. Just has no follow through. Now, am I going to stop trading my strategy because today? No, dude. I'm going to ask myself, Josh, how well did you execute? Perfectly. I literally executed it exactly how I should. See, we can't control if it's going to be a shitty day or not, but we can control how we get in and out of the market, right? Like what motivates us to pull the trigger. Watch and then ready. Watch how cool this is, guys. And this is why you have to stick to this plan because check it out. Red bar ignored. What do we do? Draw a box around every time. Just look at those wicks, dude. Look at this. Can't break the low. Can't break the low. Can't break the low. Starts go up, go up. Once that low breaks, what happens? Massive selling. So once again, use the RBI GBI to understand the context, right? The market sentiment. Because if you struggle with holding or losing, or I'm sorry, with holding trades or stopping out, once you understand this principle that I'm showing you, it's never going to make sense for you to hold a long when this happens. Never. There's no reason to hold a long here when this low breaks. These buyers are stronger than these sellers, these sellers, these sellers, these sellers, these sellers, but not this seller. How do we know? Because this seller blew the bottom off, okay? Just basic candlestick analysis that's going to serve you so well. Once I seen this, I'm like, oh boy, it's going to be one of these days. I was like, you know what? It's all good. And it's crazy. I've collected enough data to know that when my edge isn't presenting itself well, or if it doesn't have follow through, it usually means, oh, hold up. It usually means the market conditions are trash, and I want nothing to do with them. Yeah, Todd, this is your famous candle where it smokes all these candles. Look at this. This one candle smoked 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. Smoked them. So then I end up taking another short right here. Price comes down. Green bar ignored. I got a good entry on this, right? Because I didn't want to chase this short. Okay, and let me explain why. So when you learn to understand moving average principles, right? You'll know after every violent move tends to be a pullback. Okay? You guys know my famous saying, right? Pocket means pullback every time. Now, what do we got right here? We got a little pocket right here, okay? Price sold off so fast, right? That it rallies down